Good morning this Thursday, the 2nd of September. I'm Paulina Peters, a market analyst at Bell Direct. It's great to be with you. Well, the ASX dropped about 1% yesterday at the open, but better than expected GDP data trimmed losses from lunchtime onwards. It was the consumer staples and discretionary sectors that dragged the market, while energy stocks were strong despite oil prices dropping. And Telstra pushed higher yesterday after the business finalised the sale of a 49% stake in its tower business to a group of super funds for $2.8 billion. Moving to the US, we saw the S&P 500 close flat for the first day of September. Tech stocks strengthened, which pushed the Nasdaq to close at a record high. Apple shares rose 1.9%, while Microsoft, Google, Amazon and Netflix all gained about 1% each. On the flip side, we saw the Dow Jones close 0.14% lower. Also, on Wednesday's session, US investors digested disappointing employment data. US companies created far less jobs than expected in August, with private payrolls rising just 374,000, which was well below the Dow Jones estimate of 600,000. Now, what to watch today? Well, the Aussie share market is set to open lower, with the SPY futures expecting a fall of 0.2% this morning. This follows the mixed session we saw on Wall Street. In terms of economic news, Australia's balance of trade data for July will be released today at 11:30 a.m. Australian Eastern Standard Time. This is how much Australia makes from exports versus how much we pay for imports. Expectations suggest that July's reading will come in at 10.2 billion. Companies going ex-dividend today include CSL, Deterra Royalties, DRR, InvoCare, IVC, Jumbo Interactive, JIN, NIB Holdings, NHF, and Woolworths, WOW. Moving to one of the most traded stocks yesterday by Bell Direct clients, this was Kinoko, KNI. Its share price lifted nearly 19% yesterday amid the company appointing a new CEO. Now moving to commodities, the oil price steadied following OPEC and its allies agreeing to remain consistent with their existing policy of gradual oil output increases. The gold price traded within its range as investors focused on key labour data that could influence the Federal Reserve's tapering plans. And finally, the iron ore price plunged over 10% amid production curbs in China. Now to end on some trading ideas for your consideration. Bell Potter has maintained its buy recommendation on gold producer Regis Resources, RRL is its ticker code, and has increased its price target by 4% to $4.05, previously $3.89. This is off the back of Regis Resources releasing its financial year 2021 results, ahead of both Bell Potter's and consensus's expectations. Key strategic objectives were achieved by the business in the 2021 financial year, including the acquisition of the 30% interest in Tropicana, as well as the ramp-up of underground mining at Duketon. Bell Potter believed the business has a strong balance sheet, should continue to pay meaningful dividends, offers good exposure to the gold price, and forecasts production growth of 30% for financial year 2022. Regis Resources lifted 0.4% yesterday to $2.48, which implies about 63% share price growth. To end, bullish charting signals have been identified in Immutep, IMM, Janison Education Group, JAN, and Charter Hall Group, CHC, according to Trading Central. And that's it for today. I'm Paulina Peters with Bell Direct. Stay safe and happy trading.